Here we have a new study, the clustering of closes, and this is to the downside. We're using LE, which is live cattle futures, 30-minute time frame. Now, this is a very subtle yet advanced concept. It's a good tool of price action. Now, when combined with other concepts, it helps us to tell a story of strength or weakness. It can also help confirm action we see on the chart, and it helps us to pull the trigger. So a clustering of closes, in essence, is a form of price rejection, and very useful. It's a good tool as it's a rejection of price against the trend. Therefore, they are very useful as they can often indicate turning points. Let's go into this chart. Well, clearly we're in an uptrend and then boom, we fall out of bed and we fall very hard. What can we notice already? Well, we have shortening of the thrust at the extremes and also shortening of the thrust in the closes. Already our tool is being used. How can I put this here? This is the way I like to think about this. We fall here hard, 26 to say 22. So we fall 4 points in an hour. These are 30-minute bars. Then for 1, 2, 3, 4. So and then for 2.5 hours, we hold. We hold here. We get a clustering of closes. So what this tells me, or us, is that price is rejecting lower prices. So let's analyze these bar by bar. So bar 1, bar 2, 3, 4, 5. Bar 1, we come down, buying at the lows, but still weak. However, the selling pressure has eased. How do we do that? Well, by comparing to this bar. Don't get me wrong, it's still weak, but the selling is not as strong as it was on the previous bar, and we also have a higher close off the lows compared to this bar. So buying has emerged, although subtle, more buying has emerged here, and the spread has narrowed. Therefore, the selling pressure has eased off a little. Then this bar, we push up, and then we come down, and we get a lower close. But it's kind of no demand. There's no ability to really rally this bar higher, but also there's no supply as we don't come down. I mean, if we compare, this is technically a down bar. We close under this bar. So if we compare the selling to this bar, to this bar, to this bar, we could actually say that there isn't a great deal of selling in this bar. Where has the selling pressure gone? Don't get me wrong, there's still no signs of demand, but the selling has clearly ceased. If there was selling, we'd close down like this. And this bar, what do we know? Well, we push up, we come down, sellers slam it down, bang, buyers come back in, and we have a mid close. So this is a neutral bar. But this bar has activity. How do we know that traders were active? Well, from the spread. Both sellers and buyers had an attempt to rally and had an attempt to push the market lower. Yet, we end up with a mid close. Interesting. So it's a neutral bar. Then this bar, higher high, higher low, higher close. Closes firm. And the next bar, higher low, higher high. Not stuck a higher close, but we don't close at the highs. But look at the clustering of closes. We have a nice U shape. Can you see this? You can draw this round. It rounds under. It's like a bowl. And what we want to see in an ideal world from the clustering of closes is a U shape or a straight line, as is a clear rejection of lower prices, especially the U shape. Why? Well, because we can see the shift from selling selling, 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 and then buying, buying, buying emerges. And that obviously this is reflected from the U shape, from selling to buying. And these are the subtleties that we look for with clustering of closes. I mean, these bars here we would not include in our clustering of closes. They're too far apart from this action. And also this in itself is not a clustering of closes. We want them to be tight. We want price to be together. Okay, we don't want the closes too far apart. Also, here, why wouldn't this be clustering of closes? Well, because it's not at the end of a move or a trend that is long in the tooth. See, this clustering of closes occurs at the end of a move, or we'd want to see clustering of closes up here at the end of a trend that is long in the tooth. Okay, so does this action make sense? Well, let's find out and add structure. Yeah, yes, we are at support. Now, isn't this much easier to pull the trigger and give us confidence for a trade? We can comfortably buy this bar, if not this bar. Isn't it amazing how this simple line gives us a story of strength through support? We have price containment here. We hold, touch, 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 touch. As we rally, gap, a demand imbalance. Buying is emerging where it should do from support, and this propels the market higher. Then when we come back down, look at this bar now. Isn't it amazing how it's held direct at support? And we can see the clear buying. And we can see the clear rejection of lower prices. And when we combine support with this price action, with shortening of the thrust at the extremes, the closes, the clustering of closes, we have an extremely high odds trade. Don't forget, this is a 30-minute time frame. From here, say 125, to here is $3,500 from our entry down here. That's a very good trade for a 30-minute time frame. Hopefully, you can see how this is all working together. These are very powerful trading techniques. Good. Are there any questions on this chart? How do you know that the cluster is not stalling before a move to the downside? Sorry, how do I know that the cluster is not... Oh, okay. How can you gauge whether we just stall and then continue south? Well, we did do our bar by bar analysis. Think of it like this. First of all, we're at support, an established support where we had a demand imbalance and it drove us into new highs. Then we came down and we saw buying at support. Then we see this bar. Yes, there's not a great deal of demand, but where has the selling gone? We're selling here, selling here. So this little down bar is a question mark. Where is the selling? But the key bar out of this analysis is this bar. Why? Well, think deep about this. Like we've studied earlier, the price action. What does this bar achieve? Let's go into this. So buyers push this up, and we retrace deep into this bar. Okay, we retrace very deep into this bar, way over 50%, 60, 65%. Then sellers push it down. Now, at some point, this bar would be like this, and we are under this support, and we could also draw this level in here. So we are under this price action here, under this support level, under this support. We have this selling in the background, yet we cannot continue. So buyers step in, drive it up, and we manage to close mid-bar. So buyers stepped in here and they stepped in here. But what's important about that is that sellers had an opportunity for lower prices here. We should, by all intents and purposes, look at this price action. When sellers have an opportunity and the market's weak, we should be coming down. Agreed? But this, we question supply. This, sellers had an opportunity for lower prices, but buyers step in. And where are we? At support. So we're having buying emerging at support with signs of no selling. And then we rise with higher lows and higher closes. And we can also see our nuance, our subtlety of the clustering of the closes. I mean, think about this here. We're at support, and what should happen at support? Buying should emerge. So all this here is buying. This is accumulation. Very mild accumulation. Has to be accumulation. We know it's buying. So this is buying, buying. And this is like a spring bar. This tests for supply. And it fails because buyers have enough force to drive it back up. Okay? Very good question. I hope that it does answer. Excellent. Well, it appears there are no further questions. On to the next study. Here's a study, clustering of the closes to the upside. This is Japanese yen, 15-minute time frame. First thing we notice is that we're in a downtrend, where we see there's evidence of good quality selling. As we can see, spreads are wide in comparison. Only from this mini trend here, we can see that the spreads are wider, closing week on the down bars. And we make an attempt to rally here. Look what happens. Spread is half of that of the selling. So therefore we know we have selling of good quality and poor quality buying. Anyhow, we find support from here for whatever reason, and then we push up. Now this is a 15-minute time frame. So from here for 2, then for a whole hour, we go sideways. Upside progress has ceased. We hold here. Higher prices appear to have been rejected. And we can clearly see we have a clustering of closes. It's clear to see, if we draw this level in here, it's clear to see that higher prices are being rejected. We can't close under this, over this level. Look, push up, close under, push up, close under, push up, close under, push up, close weaker, and under all this price action. This area, for whatever reason, deems fair value for the sellers, which is of no surprise. Why? Because this is the original supply bar. We are in an area of supply. Think about this. So if sellers started selling here, when we go back into this area, they would defend their positions. And also, the buyers, don't forget this bar. Buyers came in, drove it up high to close above this close. So the people who bought here, they must have been buying to push it up, they would be trapped. They would be still holding some of their positions here. When we come back and revisit this area, they will liquidate to break even or for a small loss, and they will be very happy. Again, adding to the supply. But there wasn't a great deal of supply, and we know that due to this mild price action. So we can see that prices have been rejected. We get a clustering closes in an area of supply. And then we drift down, boom, we find more selling. We hold, we get a choppy rally And then we get some fairly decent buying up until here, where we have another clustering of closes. Now, this cluster of closes is difficult to trade. Or is it? Let's add structure. Now, it all becomes apparent. We have a clustering of closes at resistance with clear price rejection, where we have had previous clustering in an area of supply. So we have a license to short this bar very comfortably. I mean, by itself, just these three clusters, without context, without structure, it becomes very hard to pull the trigger here. But we do. We note all the supply bars and the clustering and resistance, clear price rejections. And we have a story of weakness, so we can short here. Then we come down, we push up, and boom. Look at this bar. Beautiful bar. If we were short from here, and we have a tight stop, this bar stops us out, but we'd have to re-enter on this bar. Why? Well, because this technically is up thrusting this high, and this up thrusts this. So let's examine this bar in detail. What does it achieve? Well, we push up, we rally, break resistance, break these highs. And then we reverse down, back through support. We break under the clustering of closes. We break under these clustering of closes. And we close weak on the lows under all this price action. And how do we do it? With a wide spread down bar, closing weak. How do we know it's wide? Because look, it's double the size. 3 times the size, double the size, double the size, 1.5 times the size. So this is good quality selling at resistance with clear price rejection. We have to take this trade. Now, we don't have to wait for the close to enter. When we can see price break these highs and then reverse back through support, closing under here, we can fine tune our entry as we just break these cluster here. Odds favour, it's not going to push up, come down and push up again. It should just push up and then come back down. So we get a finer entry. We have less risk, which is fine by me. And then we come down and then we have an attempt to rally, bang, bang. And then as we try to come up into this area, what do we note? Close off the highs. Close off the highs. Then look, this is an attempt to buy on this very narrow spread up bar. So where's the buying we've seen here, or here, or here? Can you see how this is all working together? It's very, very powerful trading techniques. And the clustering of closes is contextually correct. What do I mean by that? It's at the end. Don't forget, clustering of closes should be at the end of a trend that is long in the tooth, or at the end of a leg. So at the end of this move, clustering of closes. At the end of this move, clustering of closes. We wouldn't look for a cluster here, because this is in the middle of a trading range. That's incorrect. We wouldn't be looking for that. Okay? Excellent. Any questions for this chart? If short from second cluster or last rejection bar, where take profits? Okay, well, if you're short from here and just stops here, or say we're short from here or here, as we come down, I mean, when we know the nature of a trading range, so this is support, this is resistance, this is support. So this is our main target. But when we see this clear price rejection, odds favour us hitting this. because we rejected here. Last time we rejected. We tested. We came down. But we hold here for a while. So as we rally up, we notice selling, very weak buying. We come down, but we close off the lows. We come down. So as we come to here, I would take partial profits because we have the potential to hold a higher low here. So this will be the low. It has the potential. So we've held here, here, and here. But then as we can't rally and we see this bar, we would take, so we take partial profits here and then we take profits here. Now, if we have enough contracts on or enough shares and we see this bar, okay, now we're going into advanced trade management. When we see this bar coming, slamming down into support, yes, we will take partial profits at support, but we may want to keep some on. Why? Well, because we're not coming down weakly, are we? We're hammering straight down. So if we come down like this with very narrow spreads to support, which we now know that good selling not as good, selling, decreasing. Okay, now there's no selling on this bar, and now we're at support. What are the odds of support holding with a lack of selling pressure, which we can see decrease? Odds favour it will hold. But if we come down in one swoop, like we see this bar here, odds favour, we wouldn't say odds favour a break. It's highly likely we will penetrate support in one way or another. We can easily reverse and come back, but it's worth holding a few contracts, a few shares. So take partial profits and we hold them. And if we do close back above, we just simply exit. But yet here we can see we close under and then we try to rally back up and then we come down. Good question. Any other questions before we move on? Here we have the NQ, which is the Nasdaq futures on a 10-minute time frame. This is just a little study to highlight what isn't a cluster of closes, as it can be a little tricky to identify. However, after time and spotting action for yourselves, it becomes second nature in no time. So why isn't this a cluster of closes? Well, the closes aren't in line. We don't have a nice rounding under U-shape. And there's no clear price rejection here. Look, we have buying here, selling here, selling here, selling here, buying here, selling here. Yes, overall this looks negative, but it's not clear. This is not a clustering of closes. Price, we can draw a line through price and we can see it's very choppy, but it is not a clustering of closes. However, we do have shortening of the thrust here, from the highs as seen from here, across here, and here. Each thrust up is making less and less progress. And what's good about this shortening of the thrust here is that we are in an established old uptrend. This is a 10-minute time frame, and we've been in the trend since 10 a.m. for 7 hours. Suffice to say, this is a trend long in the tooth. And when we see shortening of the thrust, we're looking for reasons to go short. Think about this logically. We push up, good price action. 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 Then boom, we find some negativity. That's good selling here. Then we get some good buying. It doesn't really achieve a lot, but we do wipe out all this negativity. But then we see more supply. So, and then as we push higher, we're not pushing up with conviction like we were here. Here. Okay, price is struggling at the highs where we are old, when the trend is old, and we see shortening of the thrust. Okay, we're not going to go into entries or anything of the like for this chart. This is just to highlight this is not clustering of closes. Okay, this concludes our study for the clustering of closes, and on to the next.